Ladies and gentlemen, welcome back to the High Performance Trader. I'm Joshua Salvetti, and today in this video, we're going to be talking about some really deep stuff. Okay, we're going to be talking about the meat and potatoes of why it is most traders cannot pass challenges and why they cannot grow their account. Okay, I was this trader for a very long time, and I think I can help you with something based off my past experience. Okay. So I've been trading for about 7 years, and throughout those 7 years, I've always traded my own capital. I've never engaged in a funded account or a prop firm or anything like that. It just always kind of made sense to me to only trade my money, and I wasn't really big on following rules when it came to trading. I wanted to trade my style, right? I had a really big ego, and at the end of the day, there's nothing wrong with that, but you cannot be so stubborn that you are not using a very valuable tool. Funded accounts are a phenomenal tool. One, you could trade your capital that isn't yours, and two, you could learn a lot about yourself. Now, the purpose of this video is to help you to stop blowing money when the market is in unfruitful market conditions, okay? And I know that sounds like a lot, but in reality, it's to teach you to know when to strike and when not to strike, okay? Jesse Livermore, one of the most famous traders of all time, all right, became a millionaire in the Great Depression when everyone else was losing money. He was laughing to the bank. He has a famous quote. That quote is, quote, "I didn't make my fortune off trading. I made my fortune off waiting." Now, yeah, Josh, I get it. Wait till your edge appears. Click next video. No, guys, hear me out. Why is it that it is so hard for us to not get into trades? Okay. Well, it's a word specifically that starts with the letter D, okay? Dopamine. Dopamine flushes through your veins, your blood, your mind, your brain, your heart every single time you're getting in and out of the market. You also have serotonin, right? Stress hormone flying through all throughout you, right? The adrenaline, right? I love adrenaline, right? So you can only imagine the cocktail over here of a trader I used to be. Bottom line is we are very emotional beings, and these emotions get in our way. They sabotage our results. They keep us from making the next step and becoming that consistently profitable trader. So if you're trying to become a consistent day trader, you're going to have to really hone in on one approach. And I'm not sitting over here and saying my approach is perfect. It's far from perfect, but it does have statistical reliability. We have collected 13 months of data on it, and it does have a 79% win ratio. Click the links below in my bio to view that, okay? I've collected all the data. I've performed summaries every single week on the data, okay? So I know my strategy works. So if I'm failing to make money, there's not a problem with the strategy. There's a problem with me, okay? And this is where most traders fail, right? Because they can't say that, or they can't see that, or they can't change that. But the reality of the situation is until you actually see it, you're never going to change it. So the trade that we're going to be talking about today happened 9/10/2025. You can see here we cleared 87% ROI on this trade, and more or less it was just another beautiful example of our strategy. And this week has been absolutely atrocious. This was my best trade this week, one of them. But more or less, this is a trade that I really wanted to go over for you guys because to really successful, this was literally the first trade I took this day. Okay, I didn't trade any of this. All right, and it's because I've become more experienced to know until my edge is present, there really isn't any reason to participate. Okay, go back to what Jesse Livermore said. If we actually want to make money in this game, we have to learn to be patient. Now, I'm not telling you to go meditate in the corner like a monk. I'm telling you patience becomes easier when you know what to look for, okay? See, if you just approach the market and, just real quick, here we go, market opens up. We got all of our critical levels marked. We're ready to go. We got open print right here marked, all right? There's open print. We got previous day high. So in a bearish scenario, I'm looking to target this guy. We got end of day, okay? And then we got previous day low, all right? So we have our four main, 1, 2, 3, 4 levels going into the day, all right? This is how I approach the market every single day. If you want more information on this, guys, all you have to do is click that link below and I send you a free mini course, completely free but super valuable straight to your inbox. All you have to do is subscribe, put your first, last name, email in, and check out some of these testimonials. There are great people on our team that are doing great things and becoming great traders. And it's not because of the perfect strategy. It's because they know what to look for. Like, it's not this mysterious thing that you think of it, right? It's in reality, you just start knowing what to look for, so you stop making the retarded decisions that cost you tons of money. Okay, it needs to become irregular for you, unattractive for you to just enter into the market because you get a big red candle right here. Okay, you need a simple strategy. It's got to be simple. If it's not simple, I'm not going to repeat it. I'm going to screw it up, especially as I scale up in the markets. All right, so step number 1 is identify that open. There it is right there. 9:30 bell goes off. Ding, ding, ding. Open print. Bam. Identified. Step number 2, look for a moving average cross. This is the 5 and the 20 EMA, okay? Now, the market's been extremely bullish, so you don't always get the moving average cross. And you know what? If you don't get it, there's other tools for you to still identify opportunity, all right? That doesn't mean all bets are off, throw the strategy away. It means start using larger time frame moving averages, but that's a whole nother topic we'll get into another day, all right? So now we finally get a moving average cross right here, all right? We get that moving average cross, price starts to sell off, and we get a GBI right here, and I do not enter short because it is a little too far away from the critical level, all right? And it's starting to get a little extended from the 1 hour trend, okay? So once again, and I just kind of missed my entry, and you know what? That's okay. Like, it's very important. Like, if we're getting far away from my moving averages, the 20 on the 2 minutes kind of far away, I'm not taking the trade. I'm going to wait for the next opportunity. And guys, when I tell you that is more important, that's more valuable than landing a $1,000 trade, in my opinion. Because anybody can make money. But show me the trader that doesn't act like the 90%, that waits patient for his edge. And if he misses it, he doesn't go full retard and blow his account. He stays patient. Because we all know if I ended up, chasing this because I didn't want to miss it, say I end up getting in right here around 652.70, right? Now my stop loss has to go all the way up here, and guess what happened? Market reverses on me, stops me out, boom, I just lost money when all I had to do was know what to look for. Okay, so we didn't take that trade, we're staying patient. And then you know what I'm doing though? I'm highlighting here the key area of value. So this right here is what we like to call an area of value. All right, it's an area of value because if I have about the 4-minute time frame, you'll see here, this was a picture perfect example of what we like to call our criteria. All right, so what you'll see right here is we are getting a green bar right there that gets ignored. All right, now I'm sorry, it's this one. Whoop! Hee-haw. Okay, so once again, we get a solid green bar right here that was disrespected, all right? And once it's disrespected, you either enter in short or you draw a box around it. Josh, why are you drawing the box around it? Well, I just made a whole mini course on this, by the way. Make sure you check it out. And we're drawing a box around it because this is a very key level. It's very important. There's a lot of action that happened here because we had a green candle be completely disrespected in the next 4 minutes. So that tells me all these buyers that soaked into the market and tried so hard, they just got disrespected wicked bad. So as price comes back up into this level, I'm looking for shorts. Okay? I am definitely looking to see how sellers react once we come back up into the area of value. Once again, guys, the area of value is nothing other than an RBI or GBI with a rectangle around it. It's very important. These are the most valuable zones that you're ever going to trade. Okay, so once again, price comes back up into it, and then we end up getting this short play right here. All right, once again, green bar, disrespected, hopped in short. The rest was history. We cleared 87% on this trade to the downside. All right, now once again, yeah, I missed the first setup. I maybe I could have got it. Maybe I could have chased it and squeezed a little money out of the market. But that's what the 90% do. I don't want to be like the 90%. I want to be like the top 1%. don't think like them. And the famous words of Jim Rohn: don't walk like the 90%, don't talk like the 90%, don't think like the 90%, don't act like the 90%, don't get the same results as the 90%. Okay? Become diligent, become focused, become intentional with your decision-making process, with how you behave, how you act, how you think. And this is how the game starts to change. Okay? So guys, all in all, it was a great trade, over 87%. Let's just do a quick walkthrough. What was it? Well, number one, we identified open print. All right? Bam. Number two is we identified the moving average cross. Okay? This helps us visually identify the entry. All right? Number three, we identify the green bar that got ignored. That's the GBI right there. All right? But once again, we didn't see that one. We ended up trading it on the 5-minute, which gave us our short play right there. All right, and if you go through this, you'll notice there was no GBI here. This one wasn't a GBI. This was a GBI right here, and then this was a GBI right here. Oh, and guys, look at this, right? You want to see something crazy? This was a GBI right here too. And you know what? That would have been a phenomenal short play as well. So, more pro tip, PS, takeaway, key takeaways, is you are going to be only as good as your ability to follow one strategy, okay? And you need a strategy that protects you from going completely, fully retarded and blowing your account, all right? It's got to be clear. It's got to be simple. So, guys, take advantage. Click that link below. Get that free mini course. Let me know how it is, and I'll see you guys in the next video.